Good morning. It's good to be back once again. Today, I'm going to talk about the dollar against the yen. Why? Because the dollar seems to be holding strongly against this currency among its G7 peers. And the reasons behind that, obviously, is due to the strong rebound in the US Treasury yields. The benchmark 10-year has hit a low of 2.34% back in March, and it has risen to as high as 2.57% just yesterday. We have seen a broad-based rise in global stocks. So these factors do boost risk sentiment. Therefore, I think the yen would be weak against the dollar. And also last Friday, we saw that the yen weakened sharply against the euro and the US dollar because there was a report that a major Japanese bank was purchasing a German aviation business, and there was a huge demand for the euro versus the yen. So with that in mind, I think that the dollar yen will be supported on the pullback. And last time when I talked about the dollar yen, I was bullish that the dollar yen will go to 114 figure. So let's look at the weekly chart. You can see that basically the dollar has swung broadly sideways in the last 2 years after having risen from a 29-year bottom in 2016 at 99 even to 118.66. And looking at the latest price action, despite so-called mini flash crash on the first trading day in January to 104.79, price has risen to 112.14 last month. And yesterday, at Tokyo Open, we saw the dollar climbing marginally higher to a 4-week top at 112.10. So once we see a daily close above 112.14, the chart would look more bullish for the dollar to head to 114.20. And looking ahead, if we can break the 114.55 resistance, then the price is going to the psychological 115 even in the coming months. So then the recommendation is to buy the dollar yen on pullback. Currently, the pair is trading around 111.93. So I would be a buyer at 111.80.90 with a stop below 111.30. Target would be 114.50 and then 115. And in the unlikely event, the dollar goes below 111.30 or closest below 111.30, then the risk would shift to the downside for stronger retracement of the up move from 109.71 to maybe 110.70.80. And looking ahead, Japan is going to have the so-called golden week towards the end of this year. So not this year, this month of April. And the market will be closed for 10 days. So beware of market volatility due to the thin market conditions. So that's why buying the dollar yen is recommended. It is prudent to place a stop loss in case we see the so-called flash crash which occurred on the first trading day in January. So that's my view on the dollar yen, and good luck and goodbye.